This is the first time in history we have ever seen a monthly candle open below the midline of the Gaussian Channel. We're going to go ahead and talk about this chart today, specifically the Gaussian Channel on the larger time frame, and discuss what this could mean for Bitcoin in the weeks, months, and years to come. Okay, MegaWhale team, welcome back to the channel, guys. I hope you all have a fantastic day. We're going to go ahead and jump into the charts today, focusing on the Gaussian Channel, talking about this key piece of information that I don't see anyone else talking about, but more importantly, we have never, ever seen on the Bitcoin's chart in history since inception in 2010. That is, of course, a red candle printing on the Gaussian Channel. Red candle's print once the price action drops below the midline on the Gaussian Channel, as you can see expressed by this chart. It generally represents a shift in strength and direction in the price on whatever time frame you are viewing it on. Of course, the Gaussian Channel is a lagging indicator, so we do have to keep some degree of caution in mind when analyzing this chart in conjunction with other pieces of information. Before we get into the video, smash the like button, hit the comment button, subscribe to the channel, and of course join the Telegram channel. The second link in the description down below. Get access to all of our updates, analysis, charts, videos, information, news events, and so much more. As well as, if you're interested in the VIP trading channel, we will have a sale for the VIP channel at the end of the month, and you'll get access to all the information about how to join our VIP channel with over 500 trading members at the end of the month via this channel. So go ahead and join up. Let's get started with the market data, then we'll talk about the DXY and the broader markets, then we'll talk about Bitcoin, and then we'll end off talking about this. So, market data, how is the market looking? Right now, we're negative 2.5 for December. And December are usually these months where we get a lot of volatility and a lot of volume leading up into Christmas, or the complete opposite, and there's basically no price action. If you look at the history of Bitcoin in terms of a monthly chart, some of our lowest performing months have actually been in December, particularly 18, 19, 5%, 5%, and now 2022, 2.5%. I do expect price action and direction to slowly start to pick up during the end of the year. I do think by the way we're looking at the charts now, particularly where the charts are sitting, I do think Bitcoin is primed to make a continued directional move in the direction it is continuing in. And I think we can get a few more percentage on the board. I think it's very unlikely that we're going to see the quarterly turn green. I think it's hard to believe that after nearly 20 days of nothing but a small couple percent range, we're going to see a 13% pump up past 19,200. That will require a significant amount of volume pushing through some very major resistances, and I find that hard to believe. It is possible, but very unlikely. So it's more likely that quarter four will actually end up being red, and that'll be the first time in history we have seen 4 consecutive red quarters for Bitcoin. Again, these are things we have never seen happen before. Moving on, volatility 1.86, dropping, slowing down and plateauing. Not too much happening with volatility again. As you can see with the volume at 19 million. Volume's very low, volatility was very low. Volatility overall does drive volume, and they kind of go hand in hand together. As there's more volume, there's more volatility. As there's more volume and volatility, there's more liquidations. As there's more liquidations, volume and volatility, there's more price action. So they kind of merge and go, they're kind of hand in hand. So we haven't seen a lot of volatility in the last 24 hours. We haven't seen a lot of liquidations in the last 24 hours. We look at the price action within the last 24 hours, we can see all we have really seen is this merge sideways underneath one of our major resistances. And as you can see, a very clear pattern has developed. I'll go ahead and delete some of these as we was from another video. We had this rising ascending channel formation, which we actually recently broken out of on the small time frame. So you can see on the chart over here, we had a draw up over here, something around about like that. We actually have broken to the downside on that, and actually occurred to happen. That last little rejection has been occurring within the support resistance zone that spans back a decent amount of time all the way back into this November range. Obviously our retest on the 8th of December. So it does look like the direction for the short term for Bitcoin is very much downwards, but we'll come back and discuss that in just a moment. So let's talk about the broader market. So the DXY opened up red. Of course, Bitcoin did see a small little rally to the upside, but in the last couple hours, of course, DXY has found a bit of support and Bitcoin's price has been dropping. This is pretty standard. As the DXY rises, we see asset prices fall. As the DXY finds support, we're more likely to see rejections at resistance points for traditional assets and Bitcoin as such. And that is kind of what we're seeing over here. DXY has pushed down into support. At the same time, Bitcoin rejected from that upper resistance level, that gray box we told you about, and broke down from that ascending channel formation. Moving on, the S&P 500, guys, has entered that support zone, which of course is this area between these two horizontal lines. Losing this lower support zone here will indicate a continuation downwards. We are very much in a downtrend. We've been in a downtrend ever since we lost this particular low. So we are still currently in a downtrend. The question is, will we find support and bounce over here, or are we going to continue this downtrend into these lower levels? Moving on, that was the Dow Jones. S&P 500, a very, very similar picture has been painted, okay? We're still in that support range over here. It's a very slightly different location. We have lost that low. We're in this slight downtrend. Again, losing this support level over here, losing this horizontal level will initiate that continuation towards the downside. Of course, until that level is lost, we can assume that we could potentially find a degree of support or pushing sideways in this level. Nothing bullish until we clear 4,100 and push upwards to this level. Until then, the downtrend is very much in play on the smaller time frame, as well as the fact that the larger time frame, we are still in a macro descending expanding wedge, which of course is a downward consolidation. Bond yields are pushing upwards on the 10-year, indicating a potential rise. So DXY is coming towards us. Of course, as we see the bond yields rise upwards, the DXY does actually rise as the US dollar gains strength, and the 2-year government bond yields, not a lot of movement over here. We are still within a falling wedge pattern. We'd like to see a break above here to see more blood in the markets and the DXY to push aggressively towards the upside. Until then, we can expect steady price action to continue within its direction as we are seeing right now. So Bitcoin, what is happening on the Bitcoin chart? So we talked about Bitcoin yesterday. What we did see was a breakdown from the rising channel formation we were developing over the course of about 2 weeks. And that initial rejection point we actually found within that June to November low period. I'm not going to talk about that too much today because we did mention it yesterday, but you can see that we actually pushed up into that June November low. We support resistance, flipped it, and we created a strong rejection with a pretty bearish long-legged doji candle on the daily chart, pushing us all the way down aggressively into this higher volume range within the periods between early November to present. And we're currently testing these lower supports as we fall through these upper resistance and support levels. As you can see in a smaller time frame, we have recently just lost and confirmed the rejection from the support level at 16,800 to 16,750, which acted as numerous supports, particularly in early December, as well as multiple points of rejection in late November. So we're looking at 1, 2, 3, 4, 5, 6, and now 7 rejection supports from this level. Again, quite a strong point. It's quite an interesting point, as this particular level here kind of indicates that flipping point between the price action below as well as the price action above, and now we are back under this level, indicating we are much more likely to continue towards the downside. So from a directional standpoint, from a structural standpoint, you should definitely not be looking for longs here. Definitely checking for shorts as long as we remain, like we said yesterday, we told you yesterday, as long as we remain these candles below their support range, we're definitely still targeting these lower levels, whether it be the 16,550 POC level for an immediate target once more, or these lower support levels indicated by these volume chunks over here, and of course these lows down over here. These lows will not hold if we retest again. Make that very clear. If we retest these levels again down here, if we actually come down and retest 15,500, 15,800, these levels will not hold again. We have very, very little historical trading data at these levels to suggest that these levels are anything but liquidation zones, all right, liquidity spikes. They're not strong supports, okay? We have no historical volume data to suggest that we do have any degree of aggressive buying in these levels. It is just a lot of liquidations and liquidity wicks to get in big positions. We generally see liquidity wicks at the top and bottom of ranges. That is very, very normal as bigger players enter the market, and a lot of people either get wrecked from their positions or FOMO back in, or whatever it's going to be, okay? So we do expect that price to continue towards the downside slow and steady. We do expect a more aggressive price action or more steep price action to occur. Once that POC level is lost, we can expect prices to start getting a bit of a move on towards that downside, towards these levels. So again, shorting is the way to go right now. We are very much in a short-term downtrend. We're very much in a macro downtrend. We're very much confirming rejections from these upper support levels. There is absolutely no need to be sitting here saying, I'm going to take a long against the direction of the market, trade with the trend, and benefit from the trend. The trend is your friend, remember, okay? When we break back above these levels, candles get back above here, that's when we start saying, okay, we've developed some support. We've retested the support before. This could have been a fake out deviation below. Could we be developing an uptrend? And then we can look for longs. Until then, do not position yourself against the market. All it is now is timing. Position yourself with the trend and time the best entries, okay? Moving on from there, guys, let's go ahead and talk about the Gaussian Channel, because that is kind of what this video is about, right? This video is about the Gaussian Channel. We're going to be discussing what this means. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So to paint you a picture of how important this is, to make you really understand the significance of what we're seeing here, we need to show you context. We need to make you understand why it's important. And I can talk for an hour about the Gaussian Channel and explain all the intricacies or little details. I can't even speak today about what the Gaussian Channel is and what it means, but it's always better to show you guys, because we are visual learners at the end of the day. Humans have exceptional pattern recognition. So let's go ahead and show you why this is important. If we take a look at the 3-day chart, I'm going to use a 3-day chart to start off with as an example. I think it's an easy one to understand. We can see a common trend with the Gaussian Channel. And the common trend with the Gaussian Channel on the 3-day chart is that we generally create macro uptrends and macro downtrends on either side of the Gaussian Channel. And the points of rejections are usually the lower parts of the channel, being these lower deviations, or the midline of the channel. I'm going to show you an example. When we push above the Gaussian Channel, okay, particularly from the bottom side in, okay, through the midline as a consequence, we generally remain above the Gaussian Channel until we push back below, particularly losing that midline. Okay, once that midline is lost, it generally indicates a move towards underneath the Gaussian Channel, where we will find support again structurally and push and repeat that cycle. Looking again, what happens? We push from the bottom side of the Gaussian Channel into the Gaussian Channel through the midline, indicating a push through the channel again. That trend continues until that midline is once again lost, and we continue to the downside. As you can see, the Gaussian Channel can act that midline as a rejection point. We can also see that lower line of the Gaussian Channel act as a rejection. So assuming this trend is correct, and assuming this is how the Gaussian Channel works, which it is, we can assume that on the macro chart, on the 3-day chart, the point of which the Gaussian Channel will be signifying a macro reversal or a macro uptrend will be when the price action gets back above this upper resistance of the Gaussian Channel, okay? So knowing that is how the Gaussian Channel works, if we go ahead and expand it to a larger time frame now, such as a 7-day, we can see on a greater scale, a more smooth scale of how this works on a macro chart. You can see now the extent of these flips of the Gaussian Channel are even more significant, meaning that every single bear market, okay, is initiated when the price falls back into the Gaussian Channel from the upside, and that is exacerbated once we break that midline, triggering a collapse through. Look at it again, okay? Every bull market is when the price is above the Gaussian Channel. The bull market starts to lose strength as we break through the Gaussian Channel and kicks off that confirmation towards the downside as we lose the midline. And we can go show you one more time over here in 2020. We were talking about this, guys, believe it or not. We were talking about this all the way back in January, December 2021. We were telling you guys the Gaussian Channel is going to tell us when the bear market starts and how deep we're going to go. It told us exactly what to expect. The Gaussian Channel doesn't tell you where the price will end. That's the thing. It doesn't tell you how low the price can go. It tells you macro shifts in strength, particularly macro shifts in the trend. And it doesn't really matter at that point because we know when a macro downtrend, then we start looking for points of reversal. But what it does tell us again, we're breaking through a Gaussian Channel from the upside, signifying a shift in macro strength. The directional trend that we've been in for the last X amount of months is starting to weaken. Directional trend breaks once we lose a midline, and that confirms that we're going to be heading through the Gaussian Channel. You can even take smaller moves. We go from the top side in, we lose strength here, we come back up, we break the trend, and we continue down, okay? Do you see how we can lose strength as we push in? We can bounce to the midline, but we break that trend as we lose that midline and push back down. Now, we know exactly how it works. Look at the monthly chart, guys. This is why I'm telling you this is something to be concerned about, because the first time we have ever seen this occur, every single month, we have never, ever seen the price action drop below the midline. And if it works anything similar to what we have seen on the smaller time frames, such as a weekly, the daily, a 3-day, whatever, we can assume that losing the midline here is going to result in two different scenarios. Scenario number one is that the price action will unfortunately break below the midline of the Gaussian Channel and result in a drop below the lower line of the Gaussian Channel. This, of course, will ultimately make the 4-year cycle break. If we drop anything lower than 10,500, remember the 4-year cycle breaks at 10,500. Anything below 10,500, the 4-year cycle breaks in terms of percentage return from tops to bottom, okay? The 4-year cycle will technically break. That will occur upon that Gaussian Channel flip. So if we do push below here and we do follow the pattern we have seen on the Gaussian Channel reflected on every other time frame, except now the monthly, we can assume that if this does actually break and continues, we could potentially see a flip of this upward trending bottom support of the Gaussian Channel, indicating that 4-year cycle will break. This, of course, will be very, very bad for the Bitcoin price, and of course, very bad for history of the Bitcoin price going forward, as what we have here is many years of structure. Okay, chart data will now be flipped and developed differently. We have to create new structures on the macro. Number two, option number two, and is the option I hope for, is that within this monthly candle, we do bottom out. Within December, we bottom out. And again, the 4-year cycle in terms of date ranges suggests that the bottom should occur in December 2022, which happens to be where we are now. So if we bottom out in December 2022, it will suggest that it is likely that this candle will either be a fake below the midline and will push back up, or that will close just below and the next candle will open and push higher. So something to keep an eye on, guys. Definitely something to be watching. But we start closing monthly candles below this trend line, we start closing this month, next month, month after below, we're getting these increased probabilities that we're going to start dropping probably lower than we can expect based on, again, one technical indicator, but this technical indicator has shown us with a degree of accuracy how the price moves in relation to historical price action, particularly in macro trends. So something to keep your eyes on, guys, something to keep your mind on, something that I'm not too worried about. I'm not too worried about it because it is what it is. At the end of the day, I'm a trader. Everyone who watches me, you guys are traders. I've got a couple of investors on this channel, but we trade the trends, right? We don't care what happens. We jump on the price. The good thing about being a trader is we can make money on the downward. We can make money on the upward. It doesn't matter, okay? I don't care where the price goes. I do have a degree of investment when it comes to caring about where the price goes in terms of macro structure. Because as a trader, I like to know that historical data is relevant. And the reason I like to know that is because I can apply particular analysis based on historical data to develop and define trends which we're in, because if we can find a trend, we're able to swing and trade that trend with more confidence and certainty than if we're in just random sporadic price action. So we see this 4-year cycle break. If we see these macro trends start to be negated, it does apply a little bit more risk in the market as a trader. Not so much that you can't make money, but again, it does apply a little bit more degree of uncertainty. So I don't want to see that occur. From a personal bias standpoint, it doesn't mean it won't. I don't care what happens really, but obviously if we're talking about what we'd like to see, in an idealistic world, we shouldn't, as a group of individuals in cryptocurrency who want to see the success of cryptocurrency, we shouldn't want to see more exchanges collapsing. We shouldn't want to see tight regulations which prohibit and prevent and restrict people accessing cryptocurrency without certain regulations or verifications or allowances by, centralized exchanges or governments or third parties. And we definitely shouldn't want to see the prices start to lose historical supports, particularly on the macro chart, the yearly chart, the monthly chart, as these supports have provided a basis of standing for every piece of historical data and analysis we have done in the past. Okay, I'm gonna leave the video, guys. I hope you enjoyed today's video. If you've got any questions, leave them down below, and I'll catch you guys tomorrow. Cheers.